Good afternoon, this is Bob Iaccino coming to you from the frigid floor of the CME Group trading floor in Chicago. Well, it's not that frigid here on the floor, but the city is actually really cold. Talking euro currency futures. Euro currency got back above 120, first time since the week of September 18th of this year. Pretty substantial move, although it only amounted to about a 61 basis point gain for the day. And not a ton of news. We got euro monetary expansion at an unchanged number, so that wasn't a very big deal. But we did have an ECB governing board member, Ewald Novotny, who is an Austrian economist, not necessarily a believer in the Austrian school, but he's actually from Vienna, talking bullish on global trade. He says global trade grew at a much faster pace than he expected, and he sees no sign of American protectionism yet that was threatened ever since the Trump election. So he seems very positive on overall global trade, which would be positive for the Eurozone specifically. It would help the euro considering what's been going on with the US dollar lately. So it was a bullish piece of news for the euro. And it also potentially could be that the ECB may accelerate, it's a little bit of a stretch, but may accelerate the movement away from all of the monetary accommodation they've had in place. They've been very sort of nervous to talk about that, not wanting to spook the markets in any way, shape, or form. This particular comment just brought about a little bit more strength to the euro. The euro trade, being long the euro against most of the majors, is a very popular trade going in toward the end of the year. We've also got continued weakness in the US dollar. US dollar index down again today and down dramatically, 60 basis points on that. So the US dollar continues to weaken against most of the majors, not just the euro. And again, the shift into the euro comes from the weakness in the dollar, and the Trump and Republican tax plan, the Tax Reform and Jobs Act that was signed by President Trump last week, is still being viewed as quantitative easing, as opposed to a reason for the US Fed to move more quickly. So that means more dollars in circulation, a shift into the euro, and the euro strength is expected to continue. This again was holiday volume. Wasn't a ton of volume in this euro move, but getting back above 120 is significant, especially if you continue it into the new year with the early holiday volumes we expect to see. This is Bob Iaccino talking euro currency futures. Happy New Year, everyone, from myself and the traders at the CME Group.